Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So, this brings us closer. I am able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything. Understanding performance. If you are a mutual fund investor or an investor in a portfolio management scheme, it is now a habit to compare your investment performance with that of the Nifty or any other benchmark. Now, I have been an investor for 36 years. I have seen so many investors grow from lakhs to thousands of crores. I always wonder why those people don't worry too much about their relative outperformance over any benchmark. They seem mostly interested in absolute returns. Whereas the small investor or a middle class person or an upper middle class person obsesses about beating an index and obsesses about what happens every month. My mind again went back to those long bear markets, where as a small cap investor, we would be getting hammered. If I had thought about what my portfolio performance was in those difficult times, vis-a-vis the benchmark index, which was relatively not as volatile, would I have stayed in the game? This is a question I keep asking myself when I see all these conversations with people who say, oh, this month we are 3% below the Nifty or NSE 500 or some other benchmark. Oh, this month this portfolio has not done well. So, all these conversations about this month or this quarter or this half year or this full year, 1 year performance actually makes me wonder what these comparisons will create for the person who is getting anxious over. I mean, all this anxiety around these comparisons, what is it going to really contribute to that person? Is it going to create returns? I mean, is he going to find something out of this anxiety which will give him something positive? Answer is no. I remember one of the investors whom we were advising on the worst day of COVID. I mean, worst market day of COVID, the literal bottom. He said, I want to sell all my investments and go away, the world is coming to an end. We had to do it. But I told him before that personally that I don't agree with this view of yours. I don't think things are so bad. You are probably selling at the wrong moment and going out. Till today, that person has not been able to get into the market. The scars of that reactive behavior which he demonstrated that day, which he carried much against my advice and wishes, stick to him. He's not been able to overcome that. Many people argue with us about performance in the short run. Many people use short-term portfolio underperformance as a tool to make a hasty decision. I mean, it's absolutely their right, it's their money, they have every right to decide, I respect it. But my point is, as an investor, I have never done these kind of reactive things. None of the investors I have seen who have grown into iconic investors have done these reactive things. People are basically remained steadfast in a portfolio, believing in its capacity to deliver results for longer periods of time, and it is only because of this that those portfolios have blossomed, outperformed indices significantly, and done what the investor expected out of it. So, it is the behavior that has delivered for them, but not many people see that as the reason. They think that these investors succeeded because of their investment intelligence, because of the ability to pick stocks, because of their ideation skills. If you attribute, I think 90% of success is attributable to behavior, only 10% to ideation. Many people with very poor behavior have ideated superbly. They have created very good ideas and not managed to stay with them. If you are in a mutual fund or in a PMS or in your own portfolio, your capability to stay with that portfolio longer is going to determine the outcome for you. It's going to decide how much you are going to get out of your portfolio, how well your portfolio is going to do, and how much outperformance you are going to deliver. It doesn't matter if it's a mutual fund or somebody's PMS or your own portfolio, the same principle will apply. It is only in an exceptional situation that one should take drastic action, which is rare, which is not regular. In regular situations, staying invested is the ticket to superior long-term performance. If you stay in the game in a decent portfolio, your portfolio will win. I had this very interesting observation. In one of my clients' portfolios, which we created 6-7 years ago, even pre-COVID, we could not sell the funds, mutual funds, because of some other legal issue. I keep saying that our investment thinking has changed a lot. We are doing a lot of new things now, but even those old things are doing fine. That's the beauty. That's the beauty. So, staying invested, even though the client has been forced to do it, has actually delivered superior performance. They couldn't redeem in COVID, they could sell after that. They have not been able to sell right through this 7-year period. Any good portfolio, if held for 10 years, is bound to succeed. If you make 25% return for the foreseeable future, every 10 years, you are going to put a zero next to that number. Many of us, many of the people I am talking about have done that. If they put 1 0 now, the portfolio value will be in 5 figures in crores. But the secret sauce is remaining invested and not bothering about short-term underperformance, staying the course, believing in their portfolio and showing the patience that is needed to win big. Essentially, I want every one of you to build that patience, because it is not how good a portfolio is that gives you big success. It is how long you are willing to stay with a good portfolio that's going to deliver for you. Thank you for watching this video.